In this video, I'm going to be simplifying market structure and how it can be applied to your day-to-day trading. If you're a beginner trader, watch this video till the end to get a better understanding, as we'll be going over some live examples on the charts. So the market structure consists of three trends. We got the uptrend, downtrend and consolidation. So let's get started with uptrend. So in an uptrend market, we can see higher lows and higher highs being created. As you guys can see, higher low, higher high, higher low, higher high. And each time a higher high is made, we have something called a break of structure. So I'm going to mark that out for you guys. So we can see a break of structure right here. We can see another break of structure right here. And another one right here. Now let's move on to downtrend. So in a downtrend market, the market is making lower highs and lower lows, lower highs and lower lows, and so on and so forth. And once again, a break of structure happens. So I'll mark out the break of structure right here. We got a break of structure. Towards the downside, we got another break of structure and another break of structure. Third type of trend that happens in the market is consolidation. Now this is where the market is neither bullish or bearish, we're just neutral. Now these types of market we want to avoid, and the reason we want to avoid consolidation is we don't know what price will do next. It could either take you out right down here, or price could reverse and go towards the upside. So it's best to avoid these types of market. Now that you've got a better understanding of the three types of market structure, I'm going to be going over a live example on XAU USD. Let's move on to the charts. Right guys, let's move on to a live example on XAU USD. I'm going to show you guys how to apply the uptrend market structure on the chart, and I'll also show you how you guys could possibly take a trade. So let's get started. So as you guys can see, we are in an uptrend on gold. Let me show you an example. So let's start with this. So you can see a higher high right here, higher low, higher high, higher low, and a higher high. So if I go right here, I can mark it out for you. Higher low, got our higher high right up here. We got our higher low down here. We've got our higher high up here, higher low down here, and our higher high. Now, how would I take a trade based off this uptrend? Now, this is a concept that's not yet covered, which will be covered on a later stage on a different video that I make in the future. So how I would personally take this trade is based on a fair value gap, and as you guys can see, I can spot a fair value gap right here. So what I do essentially is mark out this fair value gap, and as you guys can see, price comes and taps into this fair value gap. So if I use bar replay, I'll show you an example. So as you guys can see, we marked out our fair value gap out, and we are waiting for price to tap into this area. Once price taps into this area, as you guys can see, I would enter my long position. So from the start of this fair value gap, my stop loss would be at this low right here, and I would target a simple 1 to 2 risk to reward. Now you can't go for higher risk to reward, but I would recommend, if you are trying to pass a funded account, 1 to 2 risk to reward is a great way to pass the account. So I'm gonna go on risk 1 to 2, and let's see what happens. And just like that, using the uptrend strategy for market structure, we were able to catch a 1 to 2. Now if you don't, right guys, we are now on a downtrend example on XAU USD. So what we're going to do is mark out our lower low and lower high, lower low and lower high. So as you guys can see, we are in a downtrend, just like that. And let's mark it out. So our lower high right here. Then we got our lower low down here. Then we got a lower high right here. And finally our lower low. Now what can we spot? We can see the lower low was caused by a break of structure, as mentioned before, right here. This indicates the market is now in a downtrend. Now, how would I take this trade? Once again, we would apply a fair value gap. So let's mark out the fair value gap. As you guys can see, this is my fair value gap that I just marked out. And how I would take the trade, I'll show you once again. So let's start over here. So we had our break of structure, we had our fair value gap get created. We are simply waiting for price to tap into this zone. So let's see what happens. And just like that, we can see price tapped into our zone. Now that price has tapped into our zone, what we're going to do is place a short order. So I'm going to go into my short position and place it at the start of this fair value gap. And your lows could be, you could put your stop loss at this high right here, or you could put it at here. You could put it at any highs. It's just depending on your risk tolerance. So I'm going to put it down here, and I'm going to aim for 1 to 2 risk to reward. There we go. That's our 1 to 2 risk to reward. Let's see how this trade plays out. As you guys can see, a massive candle to the downside soon as we tapped into this fair value gap. And there we go. That's your 1 to 2 risk to reward trade done. Now finally, we're going to be moving on to consolidations, a market which we don't trade. So if you ever see a market like this, I'll put a box around it. We want to avoid this type of market. And I'll tell you exactly why. So as you guys can see, price is neither going up or down. We are in a box of consolidation. And as you guys can see, after this consolidation happened, price just wicked right below and then went to the upside. So avoid these types of market. I hope you guys enjoyed this video. And if you found it helpful, leave a comment below, subscribe, like, and also join my free Telegram link below. I'll be posting my trade breakdowns and the trades that I personally take on my funded account. Thank you.